Only thing that matters is what we go and do after that. And I want to prove a point that, yeah, I had that great loss. And I always tell people, I say, I had all this success, lost it all, but now it's the rebuilding, it's the redemption period. I tell a story of hope and inspiration for people because I don't want people to think that you have to stay stuck just because of your past history.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter.
Hey you, this is Christina Suter with Real Estate Breakthrough. How to use real estate to break through to your financial freedom, your passion, and your purpose. I've got Mike Morawski with me with Resilience Equity. Mike, welcome to the show. Why don't you tell us a little bit about your background and how you got into real estate?
Yeah, thanks, Christina. I've been looking forward to being on with you. That's for sure. It's been a while. So, the short answer to that is when I meet people for the first time and they ask me who I am and what I do, I say, I'm the chief investment officer for a multifamily group. We buy large multifamily apartment complexes in specific markets around the U.S., and we partner with private investors to share in the profits. The longer answer to that is I'm a real estate investor, I'm a coach, I'm an author, I'm a public speaker, and I have a passion for the real estate business.
It makes a lot of sense, Mike. It really does. And you do, in my experience of you and observing you, you have a natural and authentic passion for the real estate business, but also generosity with people, right? From the first time I met you standing at that conference with Bronson, like this authentic generosity of like, so who are you, dude? Because I want to know you a lot better, right? And I know Bronson thinks the world of you as well. So to put Bronson Hill behind you as well. But why don't you tell me a little bit about why would you use real estate to break through to your financial freedom? It's not always the easiest. There are a lot of trials and tribulations along the way in real estate. We both have experienced them. Why continue to use real estate, and why did you choose it to begin with?
I think I have a short answer to long answer to everything today. But the short answer is, and people have said, why don't you do something else? I go, because I don't know how to do anything else. This is all I know how to do. I've been an entrepreneur since my early 20s. I remember I was working for a guy, and one day I just thought, you know what? I could do what this guy's doing. And he's not the smartest, card in the deck. And I went out and started my own business, and I've been self-employed ever since. But, my first run at business was in the general contracting business. I had a construction company. We wound up building 25 residential room additions a year. And the thing I always tell people is, as an entrepreneur, you do everything. So you do the marketing, the sales, the contract writing, the ordering, the scheduling, the hiring, the firing, the bookkeeping. And I was still in the field banging nails. And I burned out and said, you know what? I need to do something different. And so I sold my company and thought, you know what, I'm going to take a year off. But Christina, I think you can appreciate this. As an entrepreneur, you never take time off, right?
No, you're not happy. You're not happy unless you're doing something, right? We want to be engaged.
So I sold that company, and I went and I bought a couple of 2 flats in Chicago to rehab, and rehabbed them. But along the way, I met a real estate agent who was extremely successful. And I said, boy, that business is attractive to me. So I went into the real estate space as a residential agent. And for about 15 years, I sold residential real estate and then went in the apartment business. And I've never looked back. It's in my blood. I love it. I love the business. I have 2 missions in business. One is to provide safe and secure housing for my tenants. And the second is to protect my investors' capital and provide a substantial above average return.
It's beautiful. It's beautiful. And it seems very grounded and very direct. What do you feel like in your history has really prepared you to do well and be successful in real estate today?
That's a great question. I think that it's everything that's gone into that, right? I've rode a lot of market cycles, and I always say in this business, there's no geniuses in this business. There's only market cycles, and it's how you ride through those market cycles. And I've created, huge success over the years, and I've lost everything. I lost $100 million company back, during 2008, and, learned a lot along the way from that, right? I always tell people 5 mistakes I made, right? I grew way too fast as a company. I was over leveraged. I owned $60 million worth of real estate at 85% loan to value when, there was no equity in those deals when the market changed. I didn't pay attention to the details. Asset management was not something that was talked a lot about. And today these deals are made and broken at the asset management level. I was undercapitalized as a business owner. I had over 100 people working for me, wondering week to week how we were going to pay them. And then I didn't listen to people around me who saw things going on that I didn't see. You're so blinded sometimes that it's really important to have a coach or somebody, close confidants around you. You mentioned Bronson earlier. He's one of my best friends. And, if he was to say to me today, hey, you're doing this wrong, I would pay attention. Where, back then I didn't, right? And so you learn a lot along the way from the success and the failure, more so from the failure though.
Yeah, we definitely learn more from our failures and our successes. And I hate to say it because the successes feel so much better. And the successes is what we're really trying to create. But the truth is, we're going to have failures along the way. I know in 2008 and 9, I lost over 2/3 of my net worth, at least. And because I was investing more with myself and not so much with other people. But I lost 2/3 of my net worth in that, and a lot of my ego. A lot of my ego. I walked out of that an incredibly humble person. I remember the moment where I sat in my chair in my office looking at, I had just lost another $100,000 worth of value in 2008 and going, frick, it's all disappearing. And I've been sitting frozen for over 6 months. My husband and I were fighting. I wasn't getting pregnant. I was trying to get pregnant and I wasn't getting pregnant. And I felt like the biggest, fattest, add all the words you want to add in there, loser that possibly existed on the planet. And I'm like, I'll forget it. I'll just walk away from all of it. And then I just had this pause in my mind. And I went, but it's kind of all you know, Christina. It's what you're good at. It's what you've known yourself to be. And if I walk away from all of it and I'm 80, will I still like myself? Will I still be proud of myself? And I said, no, I wouldn't. So I turned around and faced the mess that my portfolio was. And I accepted my losses and I sold my pieces of real estate and I brought every dollar home I could bring home. I sold all of it. 50 doors I had direct, 300 doors I had with other people, loan, anything I had out there, condo conversion, lot split, apartment buildings, single family fourplexes, sold them all. Was flipping in 2 different states, sold it all. Brought it all home because it was the only way I could keep my self-respect intact.
Yeah, there's a couple ways you can look at it, right? And I love the saying that it's not what happened to us, it's what happened for us. Because look how much you learn from that and where you're at today as a direct result of those times, right? Because you have a choice. You can crawl under a blanket and pull it over your head and say, I'm done, or you can go back out and fight the battle.
Yeah, and I was this far away from crawling under the blanket. I really was. I was like, just forget it. And I know people in 2008 and 9 who were in real estate clubs with me who just, they did walk away. That was the best they came up with. So yeah, in a way, it's made me a better investor. It's made me more sound. It's made me much more cautious. It means I check my details more often. I'm still ADHD, so I still have to slow myself down. But at least there's so much less ego at play, so much less grandiosity, just grandiosity at play. So back to you, Mike. Given that you have built, lost completely, and now now have rebuilt, what's the secret sauce of your particular company?
Yeah. So the name of our company is Resilience Equity. And a lot of thought went into that between my partner and myself. And she actually came up with the name. And I said, boy, I really think that that's what it should be. Because, like everything we've kind of just talked about in the last couple of minutes, are you going to let failure hold you back from moving forward? And I think that, matter of fact, I had a conversation with somebody last night who really said, what are you trying to do? And I said, what I'm trying to do is prove a point that it doesn't matter what happens to us. Only thing that matters is what we go and do after that. And I want to prove a point that, yeah, I had that great loss. And I always tell people, I say I had all this success and lost it all, but now it's the rebuilding, it's the redemption period, and I tell a story of hope and inspiration for people, because I don't want people to think that you have to stay stuck just because of your past history, and that you can move forward. So, my goals today, and my best friend in the world is one of my biggest cheerleaders. And he says, you're going to be the Michael Milken of multifamily. And for, the young people listening to the podcast that don't know who Michael Milken was, he was the guy back in the 80s that sold all the junk bonds and wound up in prison for 10 years on a white collar crime. And today is, worth billions. And there's a whole institute that's the Michael Milken Institute. And, he proved a point, right? And that's the point I'm trying to prove as well.
You just gave me goosebumps, right? I mean, just being able to find resilience, self-forgiveness, self-faith, right? To say, yeah, you faced that time, like you faced the time where you actually did have to go to jail, and now you're out and you're moving forward again. And you're choosing to not be stuck. You're choosing to be the brave, solid human being that you knew you could be. And now you're living it with humbleness and authenticity and straightforwardness, and choosing to be resilient, have resilience, right? But have it, again, without the ego that gets us in trouble. The ego that has us build businesses that are too big. The ego that has me be all fancy. I'm flipping in 2 different states, and I own apartment building. I own in 7 different states, and I own this and I own that, and I do this and I do that, and and then God hands your ass back to you and whips you upside the head, and you're like, okay, I'm listening.
Yeah, I think that's so true. I think God, has a sense of humor sometimes. And he said, hey, you know what? You need a little correction right now. It's like being, it's like being in the, Olympics, and you're getting to the end and you stumble, right? But you get up and you finish. Even though you didn't finish in first, you finished. And, there's the grit that goes into it. There's the rebuilding. There's a lot of things that, there's days I have to get up and pull the bootstraps up and say, you know what, I'm going to do this no matter what. So.
Yeah. And it takes that type of strength. I'm going to flip the questions for a minute. Why don't you, talking about bootstraps and having strength, why don't you tell me about a deal that went wrong and what you learned from it? Because we all have deals that went wrong. If you've invested in real estate and you tell me you've never had a deal go wrong, I don't believe you, or you haven't invested long enough. I'm just saying, right? So tell us about a deal that went wrong and the resilience in what you did to fix it, because that's what ultimately makes us successful in this investment career that's a marathon and called real estate.
Yeah. So, I've owned and operated over 8,000 units. And when I got in the business, I knew nothing about multifamily, but I thought I knew a lot. It's because I had spent 15 years on the residential side, and I thought, oh, this will be an easy transition. I knew nothing about market evaluation. I knew nothing about pre-evaluation on a deal. I knew nothing about due diligence or about building an exit plan. And I was so excited on the first deal I bought, which was an 11-unit apartment deal. And, I look at the old pictures of that and I laugh, right? I go, I can't even believe I bought that. But I listened to the seller and the broker, and they said, oh, you can buy this. You can put a boiler in it, a new roof on it, fix the balconies, resurface the parking lot, put some exterior lighting up, go in and rehab these units. You'll be able to change your tenant base, put new tenants in, and raise the rents $150 a month. I thought, great, that's a great business plan, right? I knew nothing. If I would have done a little bit of research, though, I would have realized none of that was true. So I went in, I put a boiler in the building, I put a roof on the building, we fixed the balconies, we redid the parking lot, we put new lights on the building, we rehabbed units, and we moved the same kind of tenant in and had to rehab them again and redo them again. And we had problem and no rent payments. Well, it was a market problem more than an effective execution problem on our part. So I didn't know enough about that. So I had to learn along the way. And it's funny, going from residential into commercial, I thought, well, I know a lot about real estate. This will be easy. But the first time somebody said cap rate or NOI to me, I was like, what? What does that mean? So it was a whole learning curve around just the language and around the valuations before you even go to contract. And, my second deal was a lot easier, and actually was probably one of the best properties I ever owned. Because I knew a little bit more and I was smarter in that acquisition piece. So, today we look at things differently. We look at markets, we look at market trends. We have a 13-point checklist that the market or the sub-market has to check all the boxes in order for us to even look at a deal. Because you could bring me a great deal in Chicago and I wouldn't even look at it. But you could bring me a questionable deal in Tampa, Florida, or Tulsa, Oklahoma, and I would look at that market pretty heavily.
You don't happen to have that list as a giveaway on your website, do you?
I do have it as a giveaway. If somebody wants it, they could just DM me and I'll get it to them.
Just saying, just trying to get my listeners some good info, right? All right, they'll DM you, and I know that you've got your website up too. So tell me about what's going on right now. So I know you're in Tulsa. What's your company doing today? So you're in Tulsa, right? I don't know where else you are.
We own some assets in Florida, Dallas, Texas, and Tulsa, Oklahoma. And I'm in a couple of different partnerships. So I'm going to talk about Resilience Equity and the main partnership we're in that. But we own 5 assets in Tulsa, about 350 units in that market. 1970s vintage, C-class deals, rehab. So value add, right? And our whole focus is to go in, buy broken businesses and re-engineer them. Everything from capital improvements to operational enhancements, and to make those deals more profitable. So we buy deals below market price. We go in, we put a bunch of rehab into them and turn them around at above average market price. And we typically hold those deals for 4 to 5 years. And our investors will typically see an upper teens return with a high single digit preferred return along the way, and then some really big tax benefits, especially year one.
Oh yeah. Yeah, that makes sense, especially with chattel and stuff like that, and expenses. That makes sense. And what do what are you finding is really working for you, especially in Tulsa? Like I'm in Tulsa now too. Thank you very much for your help in helping me understand Tulsa and us meeting, like seeing your units and giving me a little bit of coaching on a new market. Even though I am a real estate investment advisor and coach, it's always good for me to get coaching when I'm entering a new market or a new style of deal. Like, why would I not get advice when there's so much experience directly around me, right, on a deal? You're in Tulsa. Thank you for helping me. So tell me a little bit more about what you're seeing in Tulsa. What's been hard? What's been easy?
Well, put a pin in that question for a minute, because I just want to address what you said about why would you not get help, right? So I've had a couple of conversations over the last couple of days with individuals. One has been about coaching. Why do I need a coach, right? Well, if I had it to do all over again, I'd have got a coach from day one. And I would have went right in the apartment business and not spent any time on the residential side because I love it so much. But, you'd be surprised the amount of owner operators that I coach in my business that are successful owner operators. But I have two coaches in my life, right? I think that we all need somebody for that accountability and that other ancillary kind of information that when we have blinders on, we don't think about it enough. And a coach gives you that ability to really stretch you a little bit and make you look at things differently. The other thing is, one of my coaching clients said to me, we're talking about raising capital and meeting new LPs and building your database and expanding your circle of influence. And he said, well, why should I go to a meetup and meet other real estate investors? And he said, they're not going to invest in my deals. I said, do you understand how many other owner operators are invested in my deals with me? Because they are diversified, right? They're a GP plus they're a passive investor. They work both sides of the aisle because you learn on both sides by doing both things. So I think they're really important conversations because I think a lot of times people get convoluted in their thought process about why should I do this, right? And you do it because there's a purpose behind it, right? So.
Well, and the reason why my face clinched up is one, yes, they might invest in your deals, but two, they might bring you deals.
There's a number of different reasons, just like you did before the call.
Just like I did before the call. I'm like, I saw this deal. It's in Tulsa, but it's a little big for me. Like, I can't do it alone, or I'm not sure I should do it at all. Like, hey, Mike, what do you think? You're in the Tulsa market, right? So, sometimes they bring you deals. So, yeah, no, and it's just, there's also a being in the game, right? Like when you operate in a silo mindset, or even a silo as an investor, like I did for so many years, where it's my own money in my own deals, making my own decisions. Maybe I've got a joint venture guy with me. And then eventually I got to where I was flipping and doing more complex things. But when I was just me and my deals, you're in this silo, which is an echo chamber. You don't really know what's going on in the market. You don't really understand what's happening around you. And therefore you kind of miss what's affecting your building and what's affecting your industry, right? I mean, that alone you want to be out of the silo, right? So let me ask you one more question. We're in tumultuous times at this point, right? With Trump and his tariffs and his choices and Trumponomics, which is not done. He's still moving stuff on the board intentionally, right? And it's going to keep moving. What's your thoughts on where multifamily is going to be in relationship to these changes that we're seeing inside of the potential economy, maybe recession, maybe not recession this year, depending upon if consumer confidence can recover?
Get in now. Stop waiting. Come off the sidelines, whether you're passive or whether you want to be active. Get the education you need and get started. I'm seeing more and more good deals come across my desk every week over the last 16 weeks of this year. And I firmly believe we're going into one of the best times our history's ever going to have seen to create wealth. And if you are somebody who is willing to step in and get involved, you're going to do really well. So we're in a we're in we're in what we call alternative asset class. So traditionally, people are in stocks and bonds, right? And people haven't wanted to invest in real estate because the stock and bond market has done really well. Well, if you look over the last couple of weeks, I go back to, there's no geniuses in this market. There's only market cycles. You watch over the last couple of weeks, we've had serious declines in the stock market. There was an issue in the Chinese stock market. Just last week, the Feds came out and said they were going to reduce rates 5 times over this year. We're bottoming out. So in those market cycles, there's 4 quadrants, and we're in the 4th quadrant, which is the last quadrant before we hit 1 again. And we're at the bottom. So you're going to start to see that stock market continue to decline. You're going to lose asset value there. If you have made money and you're still ahead of the game, you should get out now and go to alternative investments. And by investing in these alternative investments, you're going to ride the next wave up, which I think is going to be greater than the last time, because the last time took longer to recover. I believe this market cycle is going to be shorter than it was last time, which means you're going to ride up for, market cycles last 8 to 16 years. So we're going to have a shorter window in this upride till we get to the top. And if you're fortunate enough to ride this whole thing up and top tick out when the market starts to cycle down, you're going to do extremely well. I think we're going to see the largest redistribution of wealth in this country that we've seen in years. And people that have the risk tolerance for it. Matter of fact, I do have something that people could go take a test to see what their risk tolerance is. That they're gonna do well if they're willing to take a little bit of risk right now.
And I have to agree with you that I think we're now at the beginning of the end. Right? That's kind of what I want to call it, right? The beginning of like we've all been going, hey, maybe last year we'd have a recession. Maybe that's what it's going to look like. And then the Fed's like, okay, let's do soft landing. Let's do soft landing. Well, they actually, one could say, maybe put your comments below. You can agree or disagree with me, right? But I would say we were actually heading that direction. We were heading for a soft landing. But now, and the Fed was going to hold interest rates up as a way of continuing to make sure there was just enough damage in the system, right? By holding the interest rates longer because we're turning the Titanic, right? Enough damage in the system to be able to have this soft landing, but still have inflation come down. Not interest come down, but inflation come down. Now with as soon as you get consumer confidence starting to bottom out, then you're going to have a lot more turmoil. From the turmoil in the market, you're going to have even more turmoil. It's not going to be calmer. You're going to see the stock market continue to be on edge, continue to have a high level of volatility. Not more than once in the last 6 downturns we've seen on the stock market, we've seen a double dip where it's tanked, it's gone sideways for a little while, and it's tanked again. So given Trump and the difficulties and inconsistencies, I think that Trump told us what he was going to do. I think people are surprised he's doing it. like everybody's a little surprised. You mean that's happening in my backyard? Wait a minute. I thought that was going to happen in somebody else's backyard. No, it's happening in your backyard, right? We're deporting people from your backyard. We're firing people in your backyard, and we're changing your tariffs inside the United States and outside, and the effect outside and inside the United States. That's happening. And so that's going to be tough, and I think it's going to continue to be tough for us. And so therefore, I believe we are now at the visible part of noticing that the downturn has started, and maybe 2 tiers in this, because just because there's been one shot over the bow with the tariffs for consumer confidence doesn't mean there's not going to be another shot over the bow from Trump's movements doing exactly what he said he was going to do, but now we see what it means. And I think that might happen again. So I'm with you. So now is the time, and it sounds really weird, but when there's blood on the streets, when people are afraid, when it's the hardest to raise money, is actually one of the best times to buy, which is why I'm positioned to buy this year and why you're positioned to buy this year. I think multifamily is still going to take a hit in this. It doesn't mean you don't buy it, because you can't buy at the bottom of the market. You don't want to catch a falling knife. You want to buy when you know it's continuing to go down or just going to start to recover.
Absolutely, 100%.
Okay. So, Mike, what do you have that is available? Wait a minute. You have a book. You have a book. You need to tell us about your book.
My third book came out. It's Multifamily Investment Secrets, Your Explosive Guide to Real Wealth in Multifamily. And I walk people through how to do it, right? Whether you're a passive investor or an active investor, you can go to multifamilyinvestmentsecrets.com and get a copy of it. So it's, a lot of great reviews on it. So if you're a passive investor and you want to take a risk tolerance test to see really if this is a space for you to be in, text the word investor to 224-269-6700. Text the word investor to 224-269-6700. 10 question quiz. You can probably run through it in 30 seconds. It's not hard. And, you'll get a report back that says, what your risk tolerance is.
And it's so important to know what your risk tolerance is. People, because we don't always know everybody else. Like, I just got off a phone call with somebody who's like, yeah, my houses are kind of far apart. They're all about 10 minutes from each other. And I'm like, oh, okay, that's a point of view. I'm like, fascinating. So in his world, he's going to need to keep his properties close because that is his risk tolerance. He just stated it, right? He needs to be able to feel it, touch it, engage with it. Not a problem. You just want to understand what it is so that your portfolio is set up successfully based on your tolerance. So, Mike, thank you so very much. How do people get a hold of you? What's your website? Give me the spiel.
Yeah. So website is resilienceequity.com. You can reach out to me at mike@resilienceequity.com. If you're on social media, any platform, you'll find me. And I'm always putting out educational content, something that's going to help you, maybe resonate with you, but subscribe to our YouTube and, follow me on Instagram and Facebook, and you'll get a lot of that.
Hey, this is Christina Suter with Real Estate Breakthrough. Thank you so much, Mike. Wonderful having you here on the show. We're on multiple platforms, including YouTube. So check us out there. Stay on, Mike, because we got to make sure we finish the video.